Hi, one and all present here, and today we are going to see about the topic professional analytic procedure and technique. And this is Surya, the Assistant Professor, Department of Computer Science, Full Stack Developer. And the professional analytics procedures are the systematic methods used by the auditor and forensic accounts to evaluate the financial and non-financial data by studying the logical relationship and trends. These procedures help us the important things, that is audit planning, audit execution, final review. And here I am moving with the Christian versions. History, the early audit practice. Initially, the auditors may verify the document, inspect the vouchers. No structured analytic techniques are there to analyze. And nowadays, the formalization in auditing standards, it comes under the structural analytics procedure. So we can use ISA 520 formally to define the analytics procedures as the key audit tool. In US guidelines forms, they use the American Institute of Certified Public Accounts and also strengthen these practice. An evaluation over the time now moved from the simple comparison method, traditional analytics, ratio analytics, statistical methods. So trend, ratio and statistical methods has been followed in evolution. Finally, now moving with the modern enhancement. Now we are using the data analytics software, AI-based anomaly detection, automated audit tools. These are the investigation faster and more accurate. So here I'm moving with the key features. Comparing to this, the current year versus the previous year, actual versus a budget, company versus the industry benchmark. So the relationship evaluation, sales versus the cost of the goods sold. How the sales and the cost of the goods sold here. The payroll enhancements, expenses along with the number of employees. The risk identification helps identify unusual fluctuations or suspicious transaction here. So efficiency. Sometimes the analytical procedures are more efficient than checking every single transaction. So professional judgment. The auditor must apply the judgment with the setting expectation, interpretation variations, and here some of the subtopics has been followed. Trend analytics. So trend analysis evaluates the changes over the time with a 5% every year, suddenly increase 40%, sudden growth, unexpected decline, irregular patterns. And the ratio analysis, it uses a financial ratio to the assessed level, gross profit ratio, current ratio, along with the inventory turnover ratio. Reasonable test. If the company has 50 employees with the average salary 20,000 expected payroll, that is 10 lakh. The payroll records is 18 lakh, something went wrong, right? The method is powerful in forensic accounting. Finally, we are moving with the statistical and data mining techniques. Large transaction data sets, patterns, outliers. The audits can detect each and every unusual journal entries. So comparison of the budget and forecast. Finally, actual result versus the planned result has been applied. So here we are moving with a real life example. The real life example shows how we are going with the external audit, internal audit, final reviews, budget analysis, and also the business decision making. So external audit is to identify the high risk areas and plan the further testing. Internal audit to modify the performance and prevent the fraud earlier. Financial reviews, creditability of the financial statement. So the budget, evaluate the variance or forecast performance. Business decision making, manage each and every analytics technique to perform the issue. So finally, the forensic accounting help us to analyze the trend analysis, ratio analysis, and reasonable testing. The trend analysis finds a sudden abnormal increases. Ratio analysis perform the gross margin inconsistency. And the reasonable test, it sales not matching the production capacity. Each and everything is deeper investigation and fraud detection. This comes under the mind map summary. Professional analysis procedure, that is nothing but the purpose, risk analysis, and the evidence gathering, performance evaluation. The techniques here used are the trend analysis, ratio analysis, reasonable statistics techniques. So comparatively, the analysis are made under the audit stages: planning, moving, substantively testing, final reviews. The tools here we used are financial ratios, historical data, budget, and industry benchmark. The conclusion. Finally, we are moving the professional procedures are powerful tools in the forensic accounting. improve the audit efficiency, identify the fraud, strengthen the evidence, support the professional judgment. So finally, the meaning of the introduction is to data, financial data intentionally manipulated throughout the forensic accounting. Okay, thank you all.